Good morning, everyone. Welcome to another episode of the Mizuho Week Ahead. I'm Jingwen, market economist at Mizuho Bank. This week's theme is cooling inflation, heating tensions. Markets continued to balance easing inflation against escalating geopolitical risk last week. Softer US inflation data provided reassurance that price pressures are not reaccelerating, but heating tensions in the Strait of Hormuz reminded markets of latent inflation risks. With both US CPI and PPI softening, underlying relief in core pressures gives the Fed greater policy space to stay on hold and reduces market expectations of a September rate hike. However, Friday's weaker retail sales and consumer sentiment data pointed to a more cautious consumer backdrop, even if part of the retail sales weakness reflected temporary factors. Markets ultimately looked through the softer growth signals, focusing instead on rising oil prices and higher inflation expectations, paring back some of the earlier relief in USD used. For Fed Chair Walsh, the challenge remains re-establishing credibility without ceding control of the policy narrative, having opted to forego forward guidance. The upcoming Jackson Hole Symposium at end August is a prime opportunity to do so. Meanwhile, geopolitical tensions in the Middle East continued to heat up. Iran insisted the Strait of Hormuz will remain closed until its demands are met, despite Trump's claims of US control. Over the weekend, US ramped up threats on Iran, with US Treasury Secretary Scott Bessent stating that they are ready to squeeze Iran via economic pressures. That said, the effectiveness of such measures remain questionable, given sanctions have already been used for decades and secondary sanctions could worsen US trade relations with other countries. Coupled with Israel's attacks on Lebanon over the weekend, US-Iran tensions are likely to remain elevated. With little sign of progress towards resolution and uncertainty over oil flows through the Strait of Hormuz, Brent crude rose to around US $88 per barrel. Nevertheless, reports of significant depletion in US military stockpiles and the upcoming midterm elections in the US may help cap the risk of a broader military confrontation. In Australia, the RBA held its policy rate. Although it projected lower inflation and slightly higher unemployment, Governor Bullock's hawkish tone kept possibility of further tightening alive. In Asia, the dollar-yen's approach towards 160 will test policymakers' commitment to currency intervention. Comments from Bessent that the BOJ remains behind the curve adds pressure for further tightening. But the BOJ is caught in a bind, as rising rates too quickly could be too much for the economy, yet too little to shore up the yen. In Indonesia, the nomination of acting governor Destri Damayanti as the sole candidate for BI governor is concerns on central bank independence. Meanwhile, Singapore raised its 2026 growth forecast to 4.5 to 5.5% on strong manufacturing, chip demand, and AI investment. Looking ahead, markets will focus on the FOMC minutes for clues on Fed thinking, but may be found wanting given Fed Chair Walsh's preference for brevity. Attention will also be on the US-Iran conflict, although a durable resolution appears unlikely given increasingly entrenched positions. In Asia, BI is expected to hold rates, relying on existing measures to attract inflows to support the rupiah, while maintaining a measured stance towards the government's growth ambitions. Thailand's Q2 economic growth is likely to moderate amid inflation pressures and rising import demand. All in, cooling US inflation gave the Fed valuable breathing room, but rising tensions around the Strait of Hormuz complicates the picture. Geopolitical tensions continue to support energy prices, leaving markets caught between easing inflation and persistent geopolitical uncertainty. For more information, please refer to our Week Ahead publication or contact your respective sales desks and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.